Welcome to The Exchange by Evolution, a series of podcasts and insights working with some of the most prominent tech leaders in the industry. Today I'm really happy to be joined by Chrystie Dao, who is a friend, long-term business contact and the CEO of Hoobuyz. So great to be with you. Do you want to make a quick introduction, Chrystie?
Yeah, thanks Jake. It's lovely to be here. So my name is Chrystie Dao. I'm the founder and CEO of Hoobuyz. Hoobuyz is a data-rich data analytics platform, and it's powered by computer vision and AI.
Okay, fantastic. Well, today we're discussing a really interesting topic, how the payments ecosystem in Asia will evolve in 2023. So I think now we've introduced Chrystie, it'd be great to jump straight into a couple of questions. Firstly, what would make sense is to look at 2022 before seeing or looking what could happen in 2023. So from your perspective, what have been the biggest changes within the payments ecosystem in 2022?
Yeah, so what we're seeing is consumers are able to pay faster, receive the payments faster as well as B2B businesses receiving and paying payments. So we're seeing, even you don't need to look far, look at Singapore, right? So you see that QR payments has now become ubiquitous, right? So you can go food court, hawker center, and pay via QR payment or a digital wallet, which is unseen or unheard of a few years ago. So that change is increasingly really changing the way that the whole ecosystem, the payments ecosystem, is evolving.
Yeah, okay. And from what I understand, that kind of originated out of China, but it's never really taken off where I'm from in London. The QR code payment is still visible in some areas, but it's really taken off in Asia. Can you think of any reason why that is?
I guess also the government is really pushing the change, which is really helping that the consumer mindset, because you need infrastructure, and which is being supported by the government, and you also need technology, right? So that basically brings the two parties together to enable people to pay faster, receive faster, and embrace technology. So I see that's the real impetus behind the change and acceptance of QR payments.
Fantastic. And I guess that's very much on a kind of B2C basis, and obviously consumers drive the entire ecosystem. Are there any changes in 2022 that you've seen from more of a kind of B2B stuff?
Yeah, so with B2B also, there's been a lot of change. You see that businesses are now, can pay payments or receive payments a lot faster. So you look at, historically, whereby businesses, it will take them 2 or 3, or even 5 days or 10 days to pay someone or to receive payments. But now you look at some of the disruptors that basically enable a credit card to pay for expenses. That's never been heard of before, whereby, before if you were wanting to pay using your credit card, the beneficiary it has to be a merchant that accepts credit card. But that's no longer the case. You can virtually pay anyone using a credit card. All they need is either a physical bank account or a virtual bank account to allow that to happen. So no longer, it's excused that, hey, the check's in the mail, right? Because now your service providers know when to expect a payment, when you made the payment, right? So you can't use the excuse anymore, unfortunately.
Yeah, I think we should probably tell some of our clients that.
Yeah, exactly. Pay me now.
No, it's really interesting. We've implemented a corporate card for employees in Singapore. So, historically, big organisations like Mastercard and Visa, they wouldn't bother with the corporate card for low value transactions, like the transactions that we have, for example, like a client meeting or a lunch or a coffee or something like that. But, we've rolled out a corporate card that everyone has access to, and it just means people don't have to use their own money for business expenses and don't have to obviously wait 4 to 6 weeks to claim that back at the end of the month. And we're hiring a lot of trainees, of people that maybe just fresh out of university, and I think that gives a good employee experience. payments, and obviously it's effectively a wallet, so
Exactly.
it doesn't cost us anymore. And the automation, our ability to track the spend, just means that people aren't printing out receipts and stapling them onto a spreadsheet at the end of the month,
Yep.
which I guess is an example of
Exactly. Yeah.
So looking forward to 2023, what would you foresee the emerging trends to be? And no one has a full crystal ball, but
Sure.
I guess based on what you see
Yep.
in the market, and Singapore's a melting pot of innovation when it comes to fintech and particularly payments in the last 18 months. But looking forward to 2023, what would you see the emerging trends to look like?
So if you look closer to home, meaning Singapore and Southeast Asia, you see, a few of the neobanks are now emerging. So, recently you've heard about Trust Bank, which is JB between Standard Chartered and NTUC, right? So there will be a few more neobanks coming out and launching in the next, I'd say, 6 to 12 months or even 12 to 18 months. The strategy behind the neobanks is that they can go in and actually acquire customers through deposits, right? And that is an entry point for them to come into the market and then use those funds to then lend out to customers, which is the bread and butter of banking, when you think about it. The value proposition that they bring is that they can offer much better rates, and that's through, aggressive customer acquisition through that ability to do so. So they don't have the legacy systems like traditional banks have with infrastructure and all that. So they're much more agile and to be able to offer something that is much more unique and versatile for today's consumers.
Yeah.
I also see, there's also the consolidation of a few fintech players out there. You see, one note is Funding Societies, who is on a massive, aggressive path to acquire players. They've acquired, a card player called CardUp as part of the portfolio, because I think now, to be able to bring value to the customer, you want to be able to bring an end-to-end solution. So a lot of these guys who are now highly funded, heavily funded, from investors, now looking at options to then buy or build or partner with other players to bring that, to bear to the customers.
Absolutely. And just in terms of the kind of aggressive investment that you talked about over the last 18 months, obviously that's seen a huge amount of growth in fintech and particularly payment companies, and maybe with, as you suggest, seeing some consolidation around certain parts of the market. From what we're seeing, I guess the sentiment is perhaps not quite as buoyant now as it was 6 months ago, and perhaps some of the messaging from investors, private equity companies, venture capitalists, while having been very focused on growth through the first part of the year, the second part of the year we've seen perhaps the message change to be moving towards profitability slightly more quickly than perhaps was initially planned. So just in terms of the prevailing market conditions, and this is all superseded by macroeconomic factors and principally supply chain issues, inflation, the war in Ukraine, etc. And also just coming out of COVID, just coming out of the global pandemic, which means there's a lot of debt in particularly government debt globally. So prevailing market conditions, I guess, are perhaps not quite as positive as they have been through the first part of the year. How do you see that impacting the market in 2023?
Yeah, so there's still money available, there's still investments being made, but I think the days of crazy valuation, of crazy spending, and the FOMO effect that investors need to jump on the bandwagon just in case they miss out is kind of like slower, like it's slowing down. And what you see is, investors are now really looking at robust financial calculations in terms of the business model. Does it make sense for them to come in? And for fintechs, it's also around relooking at the business model. It's no longer, as you say, growth, going to acquire customers at any cost, but it's around profitability, right? So that means that they will need to relook at the business model and the go-to-market strategy. Does it make sense for them? Do they need to expand, or they focus on a particular area that they specialize in? So these are some of the, the thinking behind some of the fintechs that are looking to look at the business model very closer in terms of what's next for them. Yeah.
So, and one of the things that I've always been interested in, I was living in Singapore for 11 years, and you've been in Singapore from London, and growing up in Australia, and I think born in Vietnam. You've had a huge amount of global experience. I guess one of the things that's really noticeable about Singapore is the size of the population in Singapore means that any innovative fintech is, and there are many in Singapore, I guess, is limited in their B2C business model by the size of the population. One of the things I've seen is when a fintech has a successful or a viable product in Singapore, the limitation of entering into more highly populated markets like Indonesia, for example, is that there's a local player who can emulate that and perhaps appeal slightly more to the local market in your Indonesia, Thailand, Philippines, the higher populated Vietnam, the higher populated emerging markets, and then potentially supersede the growth of that Singapore incubator company. Is that something that you see Singapore fintechs being able to overcome, or do you think that is an ongoing trend?
I think it's it's an ongoing trend that I see, and you see that a lot of Singapore HQ fintechs they need to land and expand, right? Because the market here, the population, 5.5 million people, right? So this is a great test bed for fintechs to test and validate the business model. But the way that, for them to grow, it's really expanding out to those emerging markets, taking a product that may not be, sexy in Singapore, but super appealing to the emerging markets, right? I mean, you see, the digital wallet and a few other, products that's been in Singapore for quite a number of years now. But to those emerging markets, it's still quite sexy, So it's the ability to then either work with a partner over there and look at an entry point to allow them, to enter the market and be able to grow and expand.
Yeah. And I guess that brings us on to Hoobuyz. So I guess first, do you want to just tell us a little bit more about Hoobuyz?
Sure. As I mentioned earlier during my introduction, so Hoobuyz is a data-rich analytics platform powered by computer vision and AI. So what does that mean? So it means that we capture customer data at the source. So meaning that we know who the customer is. We know what they for a business. We know who they are, gender, ethnicity, age demographic, what they've been transacting, where they've been transacting, and what they've been purchasing. So that's super interesting and valuable for either a retailer or a business. So in the case of a facilities management company, we can come in and provide a much more integrated, seamless payment experience for those who operate a canteen for their employees, or even a hotel where they're looking at really disrupting or providing a much better customer experience when someone check in online, pay for a room, and then when they arrive at the property and how they move within that property, dine at various outlets, it's all seamless. Or even a retailer wants to know who the actual customers who are purchasing or not purchasing, and how they can actually, provide a much more personalized customer journey for these for their own customers. So we're really trying to bring technology through facial recognition, integrated with a payment solution to provide a full end-to-end solution for, either it's an enterprise, solution company, or you could be looking at, much more a medium player.
Okay, fascinating. So I guess just a really basic example of what it could provide. I guess I'm just trying to understand it fully. So if I, for example, walk into Starbucks in the US, and Starbucks were using Hoobuyz, regardless which retail outlet I walk into or F&B outlet I walk into, they would have a history of what I historically purchased.
Yeah, so if we were to look at working with Starbucks, so we would know. So for example, if we look at Starbucks like all around Singapore, say they've got 500 outlets in Singapore, right? And we work with all their outlets. So we would know if Jake turned up to the Orchard Road, what did he buy? When did he turn up? and how much did he spend and how did he pay for that? Was it cash, credit card, Visa, MasterCard? And then we can, know that on Saturday, Jake visits the Booker Tima outlet and what he buys. So we can build a profile for Starbucks in terms of a customer journey for Jake. So then they know, oh, Jake is a cappuccino drinker. Let's try to entice him with a cookie because he never buys a cookie for 50 cents. So we give these businesses the ability to not understand, but to market at a much personalized level. So in the case of Starbucks, we can upsell, cross-sell different items to Jake. And that data is actually real-time online we give the data or the power back to the business to do that through data analytics.
Okay, fantastic. So fundamentally it gives the opportunity for businesses to give a much better customer experience and potentially increase loyalty for footfall customers.
Yes.
Okay, fantastic. And with regards to Hoobuyz and the pace of change in fintech, particularly payments over the last 18 months, even now we're seeing things like mobile wallets become a little bit old school in terms of the number of organisations offering that. Now, how would Hoobuyz remain relevant?
Yeah, so the way we look at our business is that we're very blessed in the sense that we have a very experienced and innovative thought leaders on our advisory board, as well as our team. But we look at the business from the perspective that which industry is actually going through digital transformation or transforming the whole industry. So this is where we come in and provide the technology from the point of facial recognition or technology whereby, for example, a cruise line, right? So you would check in you're doing a 5-day cruise with Carnival Cruise, for example, right? So you check in online and then you purchase your 5-day cruise. You pay for it, and then when you turn up to the cruise, you still have to basically, register, queue up for an hour, have your ID check, etc., etc. And then when you go around the various outlets within the cruise, or you go to the casino, you have to bring your credit card or your wallet to pay for services. After you have a good meal, you have to, pay for that. The way that Hoobuyz come in to help these businesses, these cruise lines, digitize is that we would be able to offer them the technology to know that, hey, Jake can, register online. So when Jake checks in at the cruise, we already know that it's Jake. So then he doesn't have to queue in the queue. He can just enter on the ship and enjoy himself, because we will add a digital wallet or a virtual account to Jake. So with that data, he can go anywhere, eat, dine, use any facilities and just charge to that account, a virtual account. So at the 5 days, Jake would check out. He doesn't have to queue up. He would just have his card and then leave the ship and then go on his merry way. So this is some of the things that we're working with these industry leaders to disrupt and provide a much better user experience or customer experience, as we've never seen that before.
Yeah, makes sense. And I guess moving towards the question of talent. So, as a business, we connect tech talent with the most kind of innovative things across Singapore and globally. Payments has been such a buoyant hiring ecosystem over the past 18 months, and albeit there might be some consolidation based on prevailing market conditions, fintech and payments is still a massive growth space. If you were giving advice to anyone looking to build a career within payments or fintech, but specifically payments, what advice would you give that person?
It's an interesting question, Jake, because when I started up my career, one of my earlier roles was in transaction banking, whereby I specialized in payments. So back in those days, payments or transaction banking was the very non-sexy area of the bank, right? Nobody wanted to be in that because we set up accounts, we help, businesses move money, pay vendor payments, cross-border, etc., etc. So nobody wanted to be in that business. Everyone wanted to be in investment banking, the trading, which is super sexy. But how the world's changed, but now payments has become so sexy. everybody wants to do payments.
Yeah.
Right?
Everyone thinks it.
Exactly. Which is, I never imagined this world would come to this point, But, so for me, right, what advice, if I was to give advice to myself, 20 years earlier, I would say always question the status quo. Be curious, right? Ask a lot of questions, but more importantly, put yourself as the customer, right? If you were the customer, what experience do you want, right? Is what you're having, is what the market offering you the experience that you want? If not, then think of ways to improve. Because then, the best way I look at even now these days, when I talk to a customer and I sit down to work with them, I always start with what is the customer journey from A to Z, right? And draw that out, right? What is the nirvana? Where do you want to take the customer? Because that's your outcome, right? And then this is where we are, but we need to be here. So how do we need to build, and what do we need to bring in partners or technology to get us to that point? So back to my, my earlier point is be curious, but also always challenge the status quo. Can we do things better? How do we do things better? There's always better ways of doing it, right? And this will really set you apart from the competition, because as, an employer, I'd say this person has really, wants to make a change, right? Is a catalyst for change. And this is what, is so valuable for employees to see this candidate.
Absolutely. I think it's one of the things that we've really seen. You come from banking background, huge multinational banks, and obviously more recently gravitated towards startups, and then your own startup. And I think two of your own startups, I think what we're seeing is an emergence of interest from people in banks to work with startups, certainly over the last 18 months. Maybe that might change next year, and it might reverse back with the instability in the market. However, we've really seen a lot of demand from people within banks to work with startups, and perhaps a little bit of apprehension on the side of the startups to hire people from banks, because the perception is that people are quite, one-dimensional in their roles, perhaps not willing to do the less fun stuff that you have to get involved in the startup. But equally, people in banks have a little bit of suspicion hiring people from startups, because they feel like people are perhaps slightly unstructured in their approach, and perhaps wouldn't deal well with the slightly more bureaucratic operations of a multinational company. What advice would you give to people, I guess, from a banking background looking to join a startup, or vice versa in a startup who might want to go to a bank?
So I think I've been banking for 25 years, from my age. But what banking has really taught me is that, being very structured, right? My thought process, the way I approach a problem, how I solve those problems is very structured, right? It has its good and its bad, things as well. But if you're a banker and you're thinking to move to a fintech, I think you have to be very open-minded. In a fintech, you have, there's no pigeonholing yourself, right? I don't do this, I don't do that. You basically have to roll up your sleeves and do everything, and I mean everything, right? And then it's this hunger to learn, right? If you have this hunger to learn, then people will be willing to teach you, right? And this is the way that you need to convince someone in a fintech to hire you, because as what you said, Jake, a lot of fintechs are quite adverse to looking at banking candidates, thinking, they won't do this. They're very rigid in their thought process. They won't try this. So it's, bring forth your ability to think, because you've been taught to think a certain way, right? Your financial acumen, like bring that forward in terms of this is how I can help the company, but always come with a story of value creation. How can you help this company create value for them, but also for their customers? So you have to think about what some of the, your unique ability to bring that to bear. And for, a fintech looking to move back into banking, it's again, my ability to think outside the box, my ability to think, to be creative with solutions. So I can bring many creative solutions to the table, which, from a banking perspective, you kind of like, because the nature of the business, you're kind of pigeonholed. So banks like to see that. People feel creative. he can come with different dimensions in terms of the thought process. Yeah.
Yeah, it makes absolute sense. I think that's really good advice for people looking to switch on either side. So I guess that was all my questions. Have you got anything else that you'd want to add? Anything else that you'd want to contribute?
Maybe ask you a question, Jake. So where do you see the whole, I guess, the market from a recruitment? Do you see now, recruitment being on the agenda of more banks or fintechs, given we discussed about, the cutting back of investment dollars or fintechs? Where do you see that moving in the next 12 to 18 months?
Yeah, great question. Really interesting you asked that. So we basically sent out a request for a contribution to a number of our clients for an insights report that we're putting together at the end of the quarter. Basically, a number of our clients have approached us and asked us what the hiring sentiment is in 2023. And we've sent out a kind of survey to a number of our clients about the hiring sentiment for next year. And that's number one, what is the plan for your business? Are you hiring? Are you growing? Are you staying stable with your headcount? Are you cutting headcount, or do you not know yet? And secondly, what types of skills would you continue to hire for, and what type of skills would you perhaps downsize? And I think for the first time ever, there's been a really non-linear response. So normally when we send out this type of report, it's a very clear message. So for example, 12 months ago, it wasn't exactly the same insights report that we created. It was on a similar sentiment, and everyone was talking about growth. Everyone was talking about hiring across pretty much every skill set you can think of. Yet we haven't got the entirety of the data set back yet. But I think the really interesting thing was the sentiment was highly polarized between different companies. So, well publicized, the likes of Shopee, some of the e-commerce companies might be letting people go, and that's people across the board. We've seen people being let go in data, in software engineering, in operational roles, in talent acquisition. But that's something which seems to be a uniform intention to reduce costs within certain organisations, which is understandable if the message is now no longer growth, but more one of profitability. I think the most remarkable thing that we've seen now is that certain companies are really still driving hiring and identifying the common skills that we saw in such high demand over the last 18 months: software engineers, data engineers, digital marketers, salespeople. But certain companies are less optimistic, but there doesn't seem to be any sort of uniformity. And I guess the one thing that we're seeing is the most in-demand skills are still the data and the software engineers. And if you look at large global companies, even outside of fintech, like of Google, they basically said we're only hiring engineers. The likes of Amazon, AWS, said we're only prioritizing engineers by hiring. Facebook have, they're not letting people go as far as I know, but they're on maybe a hiring slowdown. They're still prioritizing engineers. So I think even though certain sectors of the market are letting people go, and there's still buoyant hiring in a lot of organisations. But for the first time, whereas there's a clear message 6 to 9 months ago, everyone was growing, everyone was hiring across the board. Now it seems like there's quite a lot of polarity between different companies, and it doesn't seem to be much synergy. But watch this space. We'll be producing a report end of October, and we'll be making it public. So it'll be interesting to see what it's like.
Yeah, definitely. I mean, the market's changing day by day, right? In terms of what industry is doing.
Absolutely. Well, it's been fantastic talking to you today.
It's been fun. Thanks, Jake.
No, I really appreciate you making the effort and all the contributions you shared. I think it's been really valuable to everyone. Thanks again. Great to talk.
Yeah, it's been fun. Thanks, guys. Thanks, Jake.
Thanks.